Tonight I will be speaking about the shrinking of the American middle class from the 1970s to the current day. Even as our incomes are rising at a steady pace, we actually have less money now than our fellow citizens in the 50s, 60s, and 70s earned. Between rising costs, inflation, jobs lost overseas, jobs lost to robots, and factories that just do not pay anymore the amount of money that they were paying per hour back in the 70s and 80s, $20, $25 an hour, now pay those same employees $8, $9, $10 an hour. And even as we can't afford our lifestyles, and even as the entirety of the human knowledge is in our phones, in our laptops, tablets, and desktops, our education costs are sinking, our education levels are sinking. And even though we live in a golden age of economic boom, Wall Street is the highest it's ever been. The average American does not feel that. The American middle class was the greatest engine of the greatest economy the world had ever known. And now that middle class has shrunk at an alarming rate, while those in the top 10, top 1, and top 0.1%, and even top 0.01% of all income earners have seen their wages grow exponentially. The following data and PowerPoint slides that I will be showing you will help prove that supply-side economics, also known as trickle-down economics, does not work. First, I believe I should define what is considered upper class and what is considered middle income. This chart by the Pew Research Center shows what their averages tend to be. If you take a look at the chart, a single person, upper income would be about $72,000, middle income $24,000, and you can see the numbers rise as the people in the household increase. The next chart I'm going to show you actually shows you the number of Americans at the time that were considered middle class, and then we will show you some more data that showed that in percentages. So if you take a look at this slide, in 1970, the middle class held about 62% of all income, and the upper class held about 29%. In 2014, those numbers have almost reversed. The middle class now holds about 43%, while the upper class holds 49%. As you can also see, the lowest income, the bottom 10% or so, hasn't really changed, and in fact has actually gone down a little bit. So what does this really say? Essentially what this chart says is that the number of Americans that can be considered middle class has gone down quite a bit, and that is with more two-income families. In the 70s, women were still just starting to get into the workplace. It was still mainly a male-driven society where the incomes of most families were by the man. Now, starting in the 70s, more women were getting into the workplace. But even then, with that second income, middle Americans still owned less of the economy and considered to lose what little part of the economy they did have. Now this next chart that just came up shows the actual percentages, again, of the population as it pertains to middle class and upper class, so on and so forth. If you take a look, in 1971, about 61% of the American population could be considered middle class. 14% upper class. Take a look at that today. The middle class has shrunk by 11%. The upper class now holds 21%, up 7%. One other intriguing factor, or intriguing part of this slide, is if you look at the lower class. In 1971, it was about 25% of the economy, of the population, and in 2015, almost 30% of the economy would be considered lower to lower middle class. These next slides that we're going to go through pertain more to supply-side economics, or as most people actually know it, trickle-down economics. Trickle-down economics was a theory that was thought up in the late 70s and really implemented in the 80s by the Reagan administration. Now, in theory, what trickle-down economics is the government cuts taxes on the very wealthy, those people who own businesses, the board members of those businesses, etc. And when those high wage earners have more income, they'll reinvest in their companies more, they'll pay their employees more, so on and so forth. Unfortunately, what we have seen is that when these extremely high wage income earners have more money, they stash more of it away, more of it goes overseas, more of it goes to the shareholders, none of it goes back into the company, and very rarely do employees get higher wages. These next charts that I'm going to show you show exactly how much the income inequality has grown since the 1970s, 1980s to now. First off, let's take a look how much of the top 0.1% actually owns in this country. So if you see here, the top 0.1% of the economy and the bottom 90% are exactly the same. Now in the early 80s, before trickle-down economics was really in place, the top 0.1% owned about a quarter of what the bottom 90% did. Now, it's exactly the same. So essentially, since the 1980s, while trickle-down was supposed to, in fact, trickle down, we all knew that the top wage earners were going to gain some wealth, but they were going to then reinvest in the bottom 90%. That hasn't happened. Basically, the little bit of money the bottom 90% did have shifted to that top 0.1%. This next chart will also show essentially the same thing, only in a little bit different terms. It shows the average income growth during the economy. So if you can take a look here at this chart, it has breakdowns essentially of economic boom periods or economic growth periods. So what we're going to be looking at is the second half, 1974 through 2012. If you can see 74 and 79, it was pretty close to even between the bottom 90% and the top 10%. In the 80s, when the Reagan administration took over, you can see there the percentage growth in income on the bottom 90% was about 20%, and the top 10% grew about 80%. Now, see how those trends continue. The 90s were a little different, but the top 10% still grew more. But let's look at 2001 through 2007, the Bush administration, and then 2009, 2012, which was right after the economic recession of 2008. As you can see, in 2009 through 2012, the bottom 90% actually lost nearly 20% of their income during that time, while the top 10% grew nearly 120% during that same time. So what does this chart show? Essentially the same thing the last one did. Trickle-down just does not work. That money that's supposed to trickle down to the bottom, 90% of Americans, isn't happening. That money's all getting funneled towards the top, and they're keeping it, and they're not reinvesting. And you'll be able to see here in this next chart, it's going to be a little bit more difficult, but I will break it down as we're taking a look at it. And essentially what this is, it's a share of the income from the wealthy 1%. So looking here at the chart, it begins in the late 1970s. As you can see, the top 1%, top 10%, and bottom 90% all own roughly the same, somewhere in the 30% region. Now, as we go to the present day, the bottom 90% went from having the most wealth, 36%, down to a little under 24%, while the top 1% went from 30% to over half of the economy is owned by 1% of all families. Basically, why does this matter? Well, the rich are rapidly pulling away from everybody else. That bottom 90%, that's a lot of people. That's hundreds and hundreds of millions of people own a quarter of the economy, while just a few thousand people own over half of it. So in conclusion, what can we say about the middle class in America? Not only is it shrinking, it's continuing to shrink. And if these tax cuts go through, it will continue to shrink even more. What was once over 60% of the population is now less than 50% of the population. While that may not seem like much, our population has grown since the 50s, 60s, and 70s, not just in numbers. Families need to be better off. If families aren't better off, neither are Americans as a whole. And if we can't drive the middle class back to what it was, we might not have an America for my grandkids, for your grandkids, and for their future heirs. Thank you. Good night.